if you decide that you want to preserve your privacy and make sure all the data that goes in and out of your computer is encrypted, then check out NordVPN. My affiliate link will give you something like a 2/3 discount on some of their packages.
The world has failed, I tell you. The world has failed yet again.
Hey, Tom. Good to have you back.
Hey, Rich. How are you?
I'm very, very well. And yes, very, very well. Been extremely busy with my day job, but here I am. And we're going to talk in this short video about Bitcoin, gold, and silver. We're recording this on Friday, the 12th of April, 7 minutes past 7 British Standard Time. Please subscribe and bit.ly, Crypto Rich 3 Speak, bit.ly, Crypto Rich Odyssey, bit.ly, Crypto Rich Rumble, which I really should get up there. And also, I'll have the links to your stuff in the description below, tomluongo.me. And which is absolutely fabulous podcast, Gold, Goats, and Guns podcast.
Which I don't do nearly enough episodes of.
Yeah.
I know, but it's like, booking guests and asking people to be on the show, and it's like,
no, it's
with the world, it's really hard sometimes to get out of bed and do this thing when like, okay, like these people are trying to kill us all. Like every once in a while, you just kind of like, yeah, I'm taking a couple of days off. It's like I'm spending it. It's like that joke from the Hitchhiker's Guide to the Galaxy. We're in a restaurant at the end of the universe. Hi, this is Hot Black Desiato. He's spending a year dead for tax purposes. Like, it's kind of the way I feel sometimes. Like, this is Tom, and he's spending a week dead because he's trying to prepare for World War III. Like, I've been accused of being bipolar on the best of days. So, like, what are you gonna do, right?
Well, this video should be fairly innocent. We might do another one about some of the economics and the depopulation agenda. We'll go into that because that is definitely going on, and I think more and more people are slowly waking up to it. But in this one, we're going to talk about Bitcoin, gold, and silver, and where they're at. I don't have the charts in front of me. In fact,
I as you were doing your intro, I immediately pulled up investing.com to see how things have changed since like the last time I looked at them. An hour and a half ago. So, and when we're coming into this weekly close, and one thing I wanted to point out to people, like, it's really important. Technically, from a technical perspective, Rich is an old hat at this because he's been a member for a long time. And, publicly, I don't do a lot of technical analysis. You guys, most people don't really know how I approach markets and everything else. And if you've heard other people talk, and they draw lines on charts, and they become, as far as I'm concerned, they become cubist like artists with what they do to the charts, and it's really kind of hilarious. And I just read the candlesticks and go, it's going to do this, and then apply some very basic probability statistics. And then go from there. So I'm watching the close this week very carefully because weekly closes are important, especially to most people on a day-to-day basis. Like the markets are just noisy, and they're being moved back and forth. Every market is being moved back and forth by headlines because the trading algorithms that all the big banks and hedge funds and family offices employ are all just scanning the headlines and looking for advantages there, and they're moving, and they're just playing the day-to-day liquidity game. The day-to-day flow game, right? They're day trading, and day trading looks nothing like what most people want to interface the markets with. They want to interface with the big trends that are unfolding. And so when I tell people, you know as well as I do, that I'd never even look at a daily chart, and I don't look at an intraday chart or anything else. I only look at weeklies, monthlies, and quarterlies, and sometimes, and at the end of the year, we may look at an annual chart, right, where each bar, each candlestick is based on that time period, and as a short preamble to remind everybody, markets are fractal, right? Because all information is fractal. And in that respect, what happens at the rules you would use to apply to read a chart at the weekly level are the same that you use to look at the 1 minute level or the 1 hour or the 1 hour level or the 1 year level. It doesn't matter. What matters is that at each one of those time intervals that you're aggregating on a per bar basis could tell you radically different stories, right? And you have to realize that different time period aggregation models, hourly versus weekly versus monthly, are aggregating the different types of investors. So ultra short-term charts are only catching day trader activity. and algorithm activity and market maker positioning and all the rest of it. You move out to the daily charts and you start getting into like what I like to call the Momo monkeys, the momentum chasing monkeys. They're only chasing the momentum, and give me more Momo, baby. And that's an old like gold bug thing. We used to call them Momo monkeys ages ago. And I still do because I think it's hilarious. And then you get into weekly charts and you start getting into weekly, monthly, and quarterly charts, and that's where investors are coming in, right? Swing traders are generally looking at daily and weekly charts because they're looking at multi-week swings in the markets from trends from lows to highs and whatnot. And you start getting into monthly and quarterly charts. And if you're an investor, if you're thinking about things from an investment perspective, I'm going to buy this and I'm going to hold it for X amount of time. You don't look at 1 hour charts in order to decide what you're going to do with a 5-year time horizon. You look at quarterly charts if you're looking at a 5-year time horizon. You look at quarterly closes. You look at monthly, and then you maybe dial into the time periods that are one or two iterations more resolved to keep your hand in it to see where the market is shaping up, where the market is, what the market's doing, just in case to see what your action item is going to be at the end of the quarter or the end of the month or whatever. And that's what you want to do always as anyone trying to look at charts or do any kind of investment analysis. And when anybody's giving you information on these things, if they're trying to teach you, if they're smart, they're trying to give you actionable information based on the type of person you are. So the first thing you have to do is decide who you are before you can actually then decide, what your goals are, before you can decide what charts you should read, and then whose analysis you should listen to. Because I'm not saying that because other people other than myself aren't worth listening to. It's because they have different goals. They're giving out actionable information for different than what you need. And that's important in filtering out the information. And the better you get at this, the better you can, that, okay, that guy doesn't work for me, but he's interesting to listen to. But he's talking about a different segment of the market that I'm interested in. And you may learn something from it in order to help you refine your techniques for what you do. But this is a really important point that a lot of people get lost in, because it's so easy to get lost in the sea of information. So that's all a big preamble to what's going on in gold, silver, and Bitcoin. Because now I'm watching the weekly close after the ECB announced it wasn't cutting rates, and the market didn't believe Lagarde clearly doesn't have any control over the situation because the euro is getting thrashed. We're seeing long-term movement. They're seeing the long ends of sovereign bond yield curves, especially the dollar, moving up. And that's all those things have an effect on the gold, silver, oil, Bitcoin markets, which are my bailiwick, right? Because I think that all of those things together then tell you, between that stuff, the currencies and the bonds, can give you a really good understanding of what the global macro picture looks like and what people are, and what that all solves to, right? And as a mathematician, I would say, well, each one of those is a differential equation. Solve them all and find out what's the solve here. What does that mean geopolitically? And frankly, it means that nobody wants to go into this weekend short gold, silver, Bitcoin, oil, or any of those things. And there's actually even a small rally this afternoon, today, there's been a small rally in U.S. Treasuries, short-term or long-term U.S. Treasuries, because they were cheap. So people were moving money into those. That's why we saw like the U.S. 10-year move back down 7 or 8 basis points over yesterday's horrific close. Yada, yada, yada. So that's the way I look at things when I look at the markets on a day-to-day basis. And so, gold and silver have been making all the noise in the last couple of weeks, and with good reason, because silver topped $29 earlier today. It's not going to close above $29. It's going to close around, well, it's looking like gold is actually sold off pretty hard back down. It was trading at over $2,400 cash basis last night. And we're coming into the end of the day. We're a couple hours from the close, and we're 23.52. Still a great week. And silver has actually hit a high over 29 and has corrected hard this afternoon. I'm not shocked about that at all. Like, we hit, silver tried to touch $30 earlier in the day, and it's now since then sold off $1.50 back down to the 28, 20, 25 area. Now, when I look at that from a weekly basis, and I'm going to say this on Sunday when I do my market report for my patrons, and you can ignore my dog; she doesn't know what she's talking about. Which is that bar, as I'm looking at it right now. You guys can't tell this, but I'm not looking at the camera. I'm looking at the quote screen. That's trying to set up a bar that looks bearish. It looks like a blow off top in silver, right? But that, I think, and it may be a real thing, but we're only going to know that next week. What it's looking like right now given the range of silver that it moved this week, where it opened just over 27.50, hit a high of nearly 30, hit a low of about 27, is not going to close about 28. That's closing in the lower third of the bar for the week. That's never a good sign.
Oh, wow.
Okay, because it means that the rally's over for now, or at least that's what everybody's trying to sell. Who's ever trying to sell this market? The same kind of thing is happening in gold, not to a lesser extent. But at the same time, the dollar index is trading at 106. It's a huge move. Bitcoin hasn't really moved. It's been just kind of futzing around between 65 and 70,000 for the last couple of weeks. I've been there 60s, the low 60s, the low 70s. And it's just kind of trading around between 65 and 68, which is great.
Well, more recently, because I know more about Bitcoin, it's been between 68 to 71 more recently.
Yeah, in the last couple of days. But I mean, overall, if you look at the weekly chart in Bitcoin, it's pretty clear that it's vacillating around the 65 to 68,000 area. 73 is clearly overbought, and 63 is clearly oversold, and that means that there's support around 63, and there's resistance around 75, and that's the range. But now at the same time, every week we go through this, anything above 70,000 is getting sold, and 73,000 is getting sold. But each week the lows are getting higher and higher. So the low for this week is Bitcoin trading for the low of this week at $68,000. Last week the low was 64,559. The week before that it was 63.8. The week before that it was 68.50. So every week the bulls are coming in and supporting the price at a higher level, which means that as long as we don't keep week to week, we're not violating the previous week's low. That means the bulls are chasing the bears at higher and higher. They're coming in and stopping the bears from pushing the price down at higher and higher levels. That's a bullish sign, right? Inherently, that's a bullish sign, because the bulls are over. Every lows and highs are where bulls and bears overwhelm the other side. They become the emotional extremes of the marketplace. You have to think of lows and highs that way. No matter what you do, wherever you look at a chart, the high is important because that tells you when the bears overwhelm the supply of buyers. There were no more buyers. There were more sellers than buyers, and they pushed the price down. Lows are the exact opposite. There's more buyers coming in and forcing the sellers and overwhelming the sellers. Now, in the case of both of them, we have leveraged players, right? So bears have to be short, meaning they've sold short that which they don't have. And so when they have to exit that position, they have to flip and go long to cover their short. They become buying pressure. The opposite side, if you've got leverage longs, they are in the same position where they're going to have to cover their long because they're levered, and sell that position so they don't lose any more money. So as the price drops, so then they become selling pressure. And so this is the game that the market plays, and most people just don't have a good feel for that. And so, there's a subtle difference between just the natural give and take between buyers and sellers, and some external force coming in, like a government or a central bank, and pressing on the market. Both of those things can be true at the same time, and that becomes very difficult for people to get their head around. So you'll hear people complain about Mr. Slammy in the gold market, for example. And I like the concept of Mr. Slamming. Here comes the Fed coming in to slam the price of gold back down. I have no problem with the idea of Mr. Slamming. That comes from my friend Eric Young on Twitter. But at the same time, it's not always Mr. Slamming. Sometimes it's just, hey man, gold's over freaking bought and I need dollars.
Right.
Okay. And they see an opportunity, and like momentum traders or savvy traders look at this and go, I really need dollars, but gold is moving hard and I'm long gold. I'm gonna hold off for as long as I can, and I'm gonna wait for the crowd to tell me when I should stop, because they're following the trend as any good trader should. When you're making money, you just keep allowing the thing to go. And the way I look at markets, being effectively similar to Alex Craner, a trend follower. Yeah. I don't know what signals Alex actually uses, because I never actually talked turkey with him on this stuff. Technically, like what his signals are, he probably and I'm sure he has a system, and that system tells him to do this when this happens. Well, I have a very simple system, which is when we close against the low of the last up bar in the trend. Guess what? That's the signal to get the hell out. Right. And we're not there, and I call that a reversal signal. That has to happen within one or two bars of the last bar in the uptrend. So if we've got 7 bars in the uptrend, and the last bar was, for example, in gold, say $2,300 an ounce, and one of the next 2 bars closes below that level, that's either a 1 or a 2 bar reversal, depending on when it happened, and that has a somewhat predictive in a probabilistic sense, a bit of a predictive nature, right?
Yep.
1 bar reversals are more powerful than 2 bar reversals. 3 bar reversals are not powerful at all because they're coin flips, and that's the general rule. I try to keep it as simple as possible for people. So
And I just want to.
what I'm saying right now is, in the last 4 hours, if we had done this at 10 o'clock this morning, I would have been a much different technical picture this morning at 4 hours ago than it is today. It is right now, because at 10 o'clock this morning, gold and silver were breaking out towards new highs. Gold was above 24, silver was near 30, and that's a big deal. And what I would have said at that moment is, and if silver closes at this level, we're going to have a bloodbath in silver on Monday. But since we've pushed the price back down into the low 28s, that bloodbath has now been avoided. Caveat emptor, folks, at 4 o'clock this afternoon or 4:30 this afternoon, silver may be back to $29 an ounce. Then what? Well, then the picture changes again. That's why it's always important to wait for the close, especially in markets that don't trade 24/7, 365. Gold and silver trade 23/5. They trade for about 20 or 23.5/5. 23.5 hours a day, 5 days a week. On those last 2 days, markets are closed. Now, here's the interesting part about that geopolitically. As of this morning, everybody was rushing into gold, silver, Bitcoin, oil, the dollar, blah, 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 blah. Why? Well, clearly, no one wanted to be short any of those things going into this weekend because there's a little thing called Israel-Iran hanging over the world's head.
Yes. Okay. Now I'm going to stop you there because we can do that.
Okay. I was stopping, by the way.
That's very good. That's very, very good. And I would recommend to people that they should, become a patron, because you do these really great, very simple candlestick analysis of gold, Bitcoin, oil, silver, some of the other markets and stuff, including the currency markets, and you look at the bond yields and everything. And I don't think people get how important bond yields are to.
They are. The sovereign bond markets are the biggest bond markets in the world.
Yeah.
Bar none. They're bigger than Apple. They're bigger than NVIDIA. Okay. The markets run on the treasury markets. It's a hard-fought lesson, folks. I ignored it for 20 years.
Yeah, and the mainstream media, even the mainstream financial media, get the bond markets wrong, or they don't cover it at all. So it's really, really important. I'll have a link to your stuff in the description below.
And there's a reason for that.
Okay, you're going to tell me that reason in the next video, right? Also, you and I were recording a conversation with Alex Craner in the next few days or so. So please watch out for that. And I'm going to overlay. I may overlay our video with weekly charts for gold, silver, and Bitcoin. And look forward to speaking to you soon. Find out what we can look forward to this weekend. Thank you, Tom.
Thank you, Rich. We'll talk soon.